Hey, good morning, everyone. My name is Kobe Rex. I'm a licensed loan officer, and I'm here with my partner, Heather Berkeley. Hi, Heather.
Hello.
Awesome. Hey, so what we're going to talk about today is we are going to go over where mortgage rates are at. There was just a big Fed announcement. Want to talk about a little bit of what we're thinking and how that's going to impact you next year to buy a home. And then Heather is going to bring it home with some tips on how to make sure you don't have any big pitfalls going into this season. And then finally, she has a really cool resource that we're going to go and give that away to you guys. So let's start by going to the rates. Okay. So just like with everything, I want to start with the fact that all of these rates are just an average. They assume like a 720 credit score, really good loan to value, lots of stuff that it's just a ballpark. But if you have any specific questions on how your rate would look on a loan, please reach out to me or Heather, and we would love to actually do a total cost analysis and show you what the rates would look like. Okay, so first off, let's start with the conventional 30 years, 6.82. That's about where it's been for the last week or two. It was a little bit lower before, but it's still in a range that is pretty close to what we've been seeing over the last 3 months. FHA 6.42, still a little bit higher. We were seeing around 6.25 a little bit ago. VA 6.39, a little bit elevated. And then the 15 year still wants to go under 6%. It's stuck at 6.01. So we'd like to see that continue to go down, but nothing too tragic going into the holiday season. So now let's talk about this. So this last year we had the Fed, this last week we had the Fed meeting. So every few months the Fed meets. The Fed is basically the bank that determines all the rates in the country, which basically that rate impacts a lot of things like your consumer loans. It impacts your car loans. It impacts your savings rate for like your CDs. It also impacts mortgage rates. So one of the things they look for every year is called the federal funds rate. So that rate, if it goes up, a lot of times people think that that's always going to move mortgage rates up. If they move that down, it'll move mortgage rates down. So what was interesting is they lowered the federal funds rate slightly, but there's this thing called an economic projection. So they forecast over the next year what they're going to be doing with rates. So what ends up happening is that we go from, they said that initially they were thinking they were going to reduce it by a certain amount next year, but they reduced that. And because they reduced next year's number, of cuts that they were going to do, even though they lowered the rate because they made next year look worse, the mortgage rate went up. So go figure. I think for me, what this means is that for anyone that is a fence sitter and is considering getting into a house this next year and purchasing, the best thing to do is nobody knows, especially with a changing administration politically, I would highly suggest you look at putting together your portfolio to make sure that you are ready to buy a home. Whether or not the rates are great or whether or not the right home comes up, answering the questions for you. Where is my down payment coming from? What is my credit looking like? And then making sure my income is going to qualify in a way that I need to are questions that you can answer anytime, whether you're buying a house or not. And I would highly suggest that we look at doing an application that we don't have a hard pull. We just do a soft pull. We can look at your income, look at your documents, especially if you're self-employed. We can do that, but it's probably going to need to look at that a little bit so we can have a little bit of time to make sure the T's are crossed and the I's are dotted. And especially now that we're going to a new tax year, we got all of that blessing as well of figuring that all out. So what I'm going to talk about is a lot of people think, oh my gosh, the rates are just going to be so different if I wait for a specific time. And I am going to show you real quick what the last little bit looked like. Okay, so we are going over back here to our rate chart. So the 10-year Treasury I'm going to pull up the 10-year treasury instead of the 6.5%. Okay.
Oh, I think the wrong screen is sharing still. We're looking at the interest rate.
Okay, perfect. Thank you. Okay, does that look right?
Yes, you got it.
Okay, great. So this little eye chart is called the 10-year treasury. So basically, when this goes up, most of the time mortgage rates go up. When this goes down, mortgage rates go down. So what I've done is I'm going to even take this out to 1 year. So when we're looking at this chart, so we can see it goes all the way up from 4.6 all the way down to 3.6. But if we look recently within the last 3 months, which is this little area here, it has gone anywhere from about 4.6 down to 4.1. So basically what that means is that in this band, you probably could see as much as 0.5% of change in your mortgage rate. So basically, if you are looking for, hey, I need to time the market, within this 3-month band, let's say we get to the most common time of the year where we see people move is in the summer. If this rate band is the same between June and August, your payment is only going to be different, maybe between $20 to $80 a month based on when you time it. And if there are other times where right here we had a big change from 4.1 all the way down to 3.6, which was another 0.5%, we can continue to monitor that. And you don't actually have to lock in a loan the second you go under contract, but we as loan officers are going to look at this and find the best place within this band. Also, just like we're doing this every week, you can always come back to us and say, hey, where are we at? How are things looking? Because we're constantly tracking them. And I think that's the strongest thing for if you're looking to get into a house, we can look and be like, hey, interest rates are continuing to look like they're going up. Continue to look at your houses, but maybe it won't be as favorable. Additionally, if you are that worried about your rate, one of the best tools that I like using is called seller concessions. So seller concessions, basically what you can do is receive the contract price is the same, but basically you say, seller, I'm willing to pay X, but I would like help with my down payment and closing costs. And that can also be applied to lower the rate. So for people that are sensitive to rate, this is a great option. And what I really am trying to say is that it's best to have a plan and be ready. If you don't want to keep looking at your lease at the end of its term and always be having to wonder whether I'm going to renew, how much are they going to increase that? Am I going to have to move? This is a great way for you to have the opportunity to be ready with an application, doing a soft pull, knowing what your income and knowing what you need in terms of money for the down payment and closing costs, that you will be in a great position. And this is a great segue because what I want to start focusing on is I want to turn the floor over to Heather, where she can talk a little bit more about what are some of the biggest pitfalls that can hurt you from being able to get into a house. So I will let you take it away, Heather.
All right. So what brought this topic up is I have a little booklet that says Home Loan Success is the title. So there's various topics in there to how to have a successful purchase when we're going through the loan process. So a big one that I would say is the credit. So a lot of times your credit score is going to make or break your loan pretty much. So how do you make sure it's doing well during the process? So we have the do's and don'ts of your credit during the loan process. Like I already said that. But anyhow, so a lot of times whenever you are under contract and you're so excited you're going to purchase this home and see yourself in it, and maybe you want to start furnishing it, but there's a smart way to do that and there's a not so smart way to do that. The biggest thing about credit and your finances, since this is a big financial process, is that you don't make large purchases and you don't move money, large amounts of money. So basically when you started, we did the pre-approval process, like Kobe was just discussing. We can do it and do like a soft credit pull, take a look, set you up. But then once you go under contract, you need to have things look the same, stay the same, so that by the time you get to the end and you're ready to close your loan and purchase your house, then on the final credit pull, it's not going to say that there's something different, like a new trade line. So say you decide, like right now, it's a holiday season, you're going to go on vacation. Don't click that button that says, make payments over time, because that's literally an installment that you're signing up for. You do have your credit pulled, so we can look at the ones where they're set up and they're reporting, but on those smaller ones, maybe they're not reporting, and you need to remember that, oh yeah, I went on vacation and I didn't pay for it. Or maybe I wanted that brand new TV, which TVs are getting so much more expensive, like up to $1,000, $1,500 for a TV. And then, why don't I just pay that over time? It's just, it's an easy, small payment. But when you're in the loan process, it's best not to click on any of those. So if you're furnishing your house, it's best to wait. And then once you've signed and you have your house, then you can go through and furnish it and change your finances. But that's a big one, is not adding more credit lines. So no credit cards, large purchases. Even if you're driving by and you see that car you've been thinking about for a while, just wait. It's amazing, like all the different situations that can happen, because you don't really buy a house every day, and it does take 30 days to get through this process. It can take less or quicker, but you got to kind of be mindful of it. And then there's the other scenario, like if we pull your credit and you need some credit repair, we do have people we can recommend and send you to. But for you to personally, if you're under contract, don't start deciding that you want to consolidate your debt, or you want to start self-reporting your utilities. Those things will all impact your credit score. Even the Experian, Experian Boost, it will also do the same thing. So what are some other ones? Don't consolidate education loans. There's actually a very long list in the Success book, but out of all the other pages, we just really consolidate that information to make sure that your loan process is going to succeed and that you end up in your house.
The only other one I wanted to add is disputing. Disputes should only be done with a professional credit repair company, because those disputes typically don't get removed, and those live on there and become a huge issue. And it all of a sudden we see 50 to 70 points can go in the wrong direction. So sorry to butt in, Heather, but I just wanted to come in with that one real quick.
Oh, yeah. That kind of summarizes it. You can read over a lot of them. I think the other big thing is just that mattress money, like making large deposits. And it's really a formula. So we can't say any deposit over this number. It's more of a formula based on your income and your situation to know what is that fancy number.
Yeah. And that also, we have what's called seasoning requirements. So with that mattress money, it's probably going to need to be in the bank for 2 months before we can touch it. So like Heather said, that's a very specific thing we need to talk about. There are ways around that we can try to find ways to use gift funds, but just think. And
I would explain mattress money a little bit more too. So we just generally call that. So that's like the cash that you're taking out. Maybe you're saving. You would rather put it into an envelope at home. It doesn't have to literally be under your mattress. I know my great-grandparents, they probably kept it under their mattress. But yeah, so it's that cash on hand that you do not have in a bank account that has not shown up on a bank statement. So if you go in and you deposit, you're like, oh, well, here's my down payment, so I'm going to deposit it today, and now I went under contract tomorrow. Well, we need that seasoning period of a few months.
Beautiful. Okay, I'm going to see if I can highlight your
oh, yeah.
As
Awesome.
Heather was alluding to, here is the home loan success guide that she is very nicely with our marketing department worked on procuring for you. So if you would like us to get this to you, please comment success in either LinkedIn, YouTube, or Facebook where this is being streamed, and we'd love to get this over to you. This resource definitely will help you to get a few things put together in the process. And I appreciate you guys watching. Heather, do you have any final thoughts?
No, thank you for your time, and happy holidays.
Perfect. I hope everybody has a great week. Be safe, and look forward to seeing you next week. We're going to be doing a little bit of State of the Union if you want to buy for 2025. So stay tuned and looking forward to doing that with you. Have a great one.
Bye.